All right, can y'all hear me? Hey. Y'all gotta bear with me because I think this is my first time going live. So I don't know what I'm doing. Like me initiating a live. I've been on somebody else's live. What's this plus request to join? Okay. All right, so we're gonna hopefully wait for some more people to join. And also wait for Lindsay to get here. But you can hear me clearly, right? Naji Rima, Sweet Chick Tea. Okay. Perfect. Just gonna let people come in. I need some like background music next time. Pin title of session. How do I do that? I named the title, but I don't know how to pin it. Let's see. It doesn't tell me how to pin. Type the name. Oh, okay. I did it. All right, perfect. All right, we still waiting on people to join. Stay with us. If y'all want to ask me any questions while we're waiting on people to join so we can keep this entertaining, I am willing to answer questions. Rima, you're at Papa Duke's. What are you ordering? Send us a picture of your plate, because I'm sure it has plenty of things on it. Make sure my nephew is watching me. Naji. So he could see his auntie doing her first live. Someone hit Rima and tell her that we are in the chat. I had a very long day, y'all. You wouldn't even believe it. I went to like the outskirts of Pennsylvania, drove 2.5 hours, and then I took a flight home, and I just got home maybe 30 minutes, not even, like 20 minutes ago. And now I am on live. I hope I don't look like my day. I tried to like quickly freshen up. Hey, Lindsay. So you are going to send me. Okay. I'm excited.
Leave out this room.
Lindsay, why I can't see you? Okay.
Wait,
Can you see me? What's up, Trees? Why I can't send you? Oh, I can send you a wave. Hi, Jess. Lindsay's. Can y'all hear Lindsay? Because she's frozen on my end. Okay, she went away. Okay, y'all can't hear her. All right. Hopefully she comes back. Okay, all right. Thank you. Y'all gotta coach me through this, please, because this is my first live and I just got off a flight. Okay, let me accept her again. Hi, everyone.
what's going on, Shari? Are we good now? Can you hear me?
Can you hear me
Yeah, I can hear you.
okay?
Yeah, I can hear you good. You
Okay,
can
okay.
you can hear me?
Hear you.
Okay. All right. Let me see. Let me
Um,
put the volume up on this.
People are joining in. So now that you joined, I'm sure we're gonna get more people.
Hey, what's going on, Tony? You can't hear us? It says we hear her. Okay. Shari, I don't hear it I keep not hearing you. I can hear you now. Can you hear me? Hey everybody.
I can hear you clearly. Can you hear me?
I can hear you clearly now.
Perfect.
Okay, you can hear both of us. What's going on, Rima? Hey Tony. Hey everybody.
Let a few more people join before we start, Lindsay, just because
Okay.
I'm sure more people are gonna see you joining and come in.
Okay. Bareline said don't be on here like verses.
On live. Well, this is my first time ever starting a live.
It's
So
okay. It's gonna be simple. That's so funny.
oh yay. People are joining.
What's up, Jessica? What did Najee say that Jessica laughing at?
They said we like the Verizon commercial. Can you hear me now? Can you hear
You know they gonna have jokes. So what's going on, y'all? Let me see.
my day? And then I had a long day, but I got here finally.
Yes. Yes. I thought you was gonna be a couple minutes late. I was giving you some time to get on. Everybody on here who knows me knows that I'm usually late. So as you guys can see, I was on time kind of today. I did a good job. So that's it.
Okay,
Huh?
I feel like we could start. We can.
Yeah, we definitely can. We can start. People will come. We can start. They'll join as they come. Tony, I was on time. Stop it. Stop it for all of you people saying I'm not on time. I'm
So,
trying to figure out why this. I got like this new stand, and I'm really not understanding why it goes off and on. Hold on.
can y'all hear me? Okay.
All right, I pressed the side button of it. Okay, here we go. I think.
All right. So, all
Just like that.
right, Lindsay,
I
you good?
can hear you.
So I wanted to first start off with one, thanking everyone for coming. This is our first Each One Teach One episode, a series that we started through Pink is Love, which is basically just about sharing knowledge. We want to share more knowledge at no cost and just making, more knowledgeable on things that you may know. Was the first person that introduced me to life insurance, right? I didn't grow up having I had a very limited understanding of what it was, right? I associated life insurance with that's big. Yeah.
You know what, Shari? You're going in and out.
Okay.
I can hear you now, but you was just going in and out.
Can you guys hear me okay now? I don't know what to do. I'm trying to figure out. I'm still going in and out.
Are you on your Wi-Fi or are you on just your phone on your cellular phone?
Ooh, hold on. I'm on Wi-Fi.
Maybe that's it. Cause I had to switch mine to just my phone.
I'm trying to fix it. I don't know how to do this. Hold on. Yep. Can y'all hear me now?
I can hear you, but I don't see you. All right, I see you now, Shari.
You can't hear me.
I can hear you.
Okay. So I'm just gonna hold it like this. Tell me if you stop hearing me. Okay.
All right.
All right. So Naji, you're telling me to not be on Wi-Fi? All
I
right, so
think.
we're just gonna go. I'm gonna start. If you can't hear me or anybody can hear me, just tell me that you can't hear me. So basically, I was saying that this Each One Teach One series is all about sharing knowledge, right? And we are using this first series to talk to everyone about life insurance. As I was saying before, like I had a lot of misconceptions around life insurance. And you were the first one to really introduce me to the benefits of it. And I feel like all of this information, I want to make sure that we're sharing it in our community. I want to, especially for Pink is Love, it's all about building community and feeding information to our sisters, our brothers, whoever is joining so that we could, be in the know and elevate our lives as best as possible. So first, Lindsay, definitely would love for you to introduce yourself to everyone that may not know who you are, and then just giving your backstory about how you joined, and got into the business of life insurance.
All right. So my name is Lindsay. On Instagram, I'm Lindsay Smith, the agent. I've been in life insurance now for like 12, 13 years. And so basically, I have a company that I also train agents as well, just to kind of try to bring life insurance more into our community by training more of our, Black agents to get them into our communities, educating our people about getting life insurance is why I came up with the whole mentee program. Um, Also, I come from, originally I was with New York Life for about 10 years. I went independent maybe like 5 years into being with New York Life. So now I'm an agent that's able to sell life insurance anywhere from any company. So I'm not limited to one company for my clients, which really allows me to be able to give clients whatever it is their need rather than what the company is offering. That's pretty much it.
Amazing, amazing. Um, and I know we often talk about like the common misconceptions around life insurance, right? Because like as I mentioned before, like I would always associate life insurance with funerals. That was my understanding of it.
Most
And it
people.
wasn't until you really opened my eyes and helped me to understand like the benefits around it, that I was like, I started getting more heavily invested in it for my family, for the future, for generational wealth, all of that. So, what are some of the common misconceptions around life insurance?
So really, normally, most people think that life insurance is just a death benefit, meaning that when you pass away, it pays money out and that's it, right? Where people don't realize that actually with life insurance, you can build wealth, you can build an asset. So while you're alive, you can actually use the cash value in the policy for your financial needs throughout your lifetime. Also, a lot of people think that their job insurance is sufficient, right? Like, I got a job, I got insurance at my job, I'm good. Not so much so, because when you either leave your job, you retire from your job, and in today's day and age, so many people are becoming entrepreneurs. They're staying at their job 2, 3 years, they're off to the next thing, right? So this means you don't have insurance. So
Mm-hmm.
as you switch from job to job, what are you going to do? Obviously, there are some jobs that have insurance that you can take with you, but you would know that you have that. And the other issue with that is most people lose it anyway, because when they switch jobs, they don't contact the company and say, hey, here's my bank account when it
Mm-hmm.
was coming out of your check.
Mm-hmm.
I think some of the other common things are common misconceptions of life insurance is people are like, oh, it's too expensive, I can't afford it. But there's so many types, and really there's a type for everybody's pocket.
Right.
So no matter where you are financially, you don't, of course, there's people paying $10,000 a month for insurance, but there's people paying $10 a month for insurance.
Right. Right.
So it can fit anybody's needs. It really just depends on what it is that you're trying to cover, how much coverage you're trying to get, how old you are. Um, and another thing is a lot of people kind of wait until they think they need the insurance to get it. People are always like, I need insurance now. My grandmother's dying tomorrow.
Mm-hmm.
I mean, what can I do? If they were paying out policies when you're about to die, they would be out of business,
Right.
right? So, people, the better thing to do is to get insurance while you're younger, while you're healthy, because
Right.
then at that point you can really build your net worth by getting a lot of insurance for a small amount of money because you're younger.
Right.
The older you get, the more it costs. And sometimes people don't qualify for it, right? Sometimes you're sickly and you're not able to even qualify for the insurance. So those are some really common misconceptions. I would say, what else would I would say? Also, one other thing,
Mm-hmm.
the whole life versus the term. That's, insurance is debatable. What
Mm-hmm.
type you want, how much you want, should I spend this amount, shouldn't I spend this amount? You
Mm-hmm.
got people like Dave Ramsey who tell you, don't buy whole life, buy term. But he's saying this and he got millions in the bank, right? And so to some of the people, the majority of the people who live in the poverty line, they don't have $10,000 and $15,000 in their bank account when somebody dies tomorrow.
Right.
So telling them, hey, buy term and invest the rest, and then they don't invest and
Right.
they don't buy the term, that doesn't work,
Right.
right? So I think we have to look at what our own situations are, and that's how we figure out what's the right insurance for us. It's not one insurance that fits everybody. You know, it really depends on your finances, your family makeup, and, you know, all the different moving parts, your health, to see what's going to be a fit for you.
Right. And let's talk about term and whole life, because I don't want to assume everybody knows what, you know, the difference between those two. What is term and what is whole life, and what are the benefits of, I mean, well, what does each come with, I should say?
Okay. So the simple explanation is term is temporary, right? So that's going to mean that it's a policy for a specified amount of time. So meaning if I'm getting a 10-year term, it lasts for 10 years.
Right.
In the 11th year, I don't have it anymore.
Right.
20-year, 30-year, whatever year you can get. The thing is that you can't get like a 50-year term.
Right.
You know, the biggest you can get is 30. Some companies have 35, but that means you're 20 when you get 35 years, right? So you can't at 60 buy a 35-year term.
Right.
So it's made for you to have it for temporary liabilities. So people who have kids, people who are covering mortgages, people who are covering debt, tax debt, shared debt with their spouses. That's the type of policy you would want to get, because it's the most affordable type of insurance. So you'll get a lot of coverage for the least amount of money compared to the other types. This does not mean this is your only option, right? Because like I said, it's temporary. It's only going to pay out if you die in that time frame.
Right.
All
so
right?
If you outlive the term.
Right. Most people, they only pay about 1% of terms. But the reason why people get terms is because you don't know when you're going to pass away.
Right.
If I could tell you the day, I would get insurance the day before.
Right.
Right. And because unfortunately we live in a world where people get sick unexpectedly, tragedies happen unexpectedly, you don't know. So it's really a peace of mind for you, especially with kids, especially if you have a family you're taking care of. It's a good way for you to have a lot of coverage, and you don't have to have that hefty premium, right? Now, term has a benefit of also being convertible. And what that means is you can actually change that policy from being temporary to permanent. You can switch it to either whole life or universal life. Those are both permanent policies, whichever one you like, as long as the company that you got it with offers those products. So being convertible allows you to change it to permanent without having to go through the medical exam again. So you already have qualified for it. So let's just say you're a person who ends up getting sick in the midst of your term. Luckily, if it's in your convertibility period, you would be able to still switch to the permanent policy and not have to worry about the insurance company say, oh, you don't qualify. Okay. So term has its benefits. It's not like, oh, I don't want term because it doesn't make me money, but it may take care of your family if you were to pass away. Okay. And one other little solution I like to say, example I like to give with the term is that, what if I was to tell you that I would give you $1 million, right? Or I'm going to give you $100K to take care of your family if you die tomorrow. Which one would you want? You would want the million, right? So yes, the 100K would have been an asset for you. But if I died tomorrow, the million is going to do my family justice when the 100K is not going to go as far. All right. So that's term. Whole life is a permanent policy. And whole life, it builds cash value. It grows over time. It also allows you to be able to have a leveled premium. So whatever your premium is when you get that policy, that's what it is. Now, if you're with a company that's mutual, that's going to be a company that pays dividends. All right. If they choose to pay them, they pay dividends. You will have a chance when that policy pays for itself. And so you won't actually have to pay that policy for your entire life. Now, in whole life, let me give you an example. If I'm 30 years old and I buy a $100,000 whole life policy, maybe costs about $70, $80, okay? By the time I'm 85, it's probably worth about $250K. So what that means is that you brought $100K, but you actually get to leave behind 250 plus if you make it to 85. The cash value portion that you can borrow from would be about that 100 to 150,000 mark. So that means if you needed to borrow the money, you could borrow that money. If you didn't pay it back when you pass away, they'll deduct it off the death benefit. But guess what? You brought 100K. If you borrowed 100K from yourself and passed away, and they deduct 100K, guess what? They're still paying your family 150K tax free. So you're still winning with 100K in your pocket, and your family getting another 150. That's why I say it is an asset.
Yes.
Right? And don't compare it. Go ahead, Shari.
No, I was going to say that I just want to make sure everyone's following, because it took me a long time to really grasp the whole concept, right? So you purchasing a whole life policy, one, you know, God willing, you're able to live for the whatever the max amount of years of the policy. Well, it's a whole life, so it's
whole life, so it's for your entire life.
But you know, God willing, you purchase it at a certain time, and you're gaining cash value. You can borrow that cash. That cash is growing at a certain interest rate, right?
Right. So whatever the dividend payout that the company is, it changes, right? So but it's compounded.
Right.
So that's why what you'll notice in your whole life policy is initially the cash value might be growing slow, but in the latter years it's growing at an exponential rate. That's why it's a long-term policy. Everything you get as an asset is not going to be something that I buy today and it's $1 million tomorrow. But if we start to put our money into things that grow over time, when you're not thinking about it and you come back to it 20 years later, and Shari, you look at your policy, you're like, oh shoot, I got $300,000 in there.
Right. That's right.
That's the purpose of it, right? It's not a get rich quick scheme.
Right.
Right. It's not that.
Pretty.
But it will make you money.
Yeah. And the good thing about whole lives, if you hold a whole life policy, if you're able to afford it, is that it's protecting your family, but it's also giving you a level of security, a cash flow. God forbid something happens and you need to borrow out of it, and you don't necessarily have to pay it back, right? If it's your money, right? And it's tax-free money, right?
Right.
It's tax-free.
Right.
Yeah.
And so one of the things with whole life, also, again, whole life is one of the permanent options. And I do want you guys to know there are many different types of whole life policies. Okay. There are actual, for people who may have a little bit more money to spend, they can customize their whole life policy and actually choose a certain amount of years that they want to pay, and they'll be done completely. So they can get like a 20 pay. So I pay it for 20 years. I don't owe any more premiums. My cash value continues to grow. I'm still able to borrow from it. It's still making money. Death benefits growing, but I don't have a premium.
Right.
And so for people who, want to say, listen, I want to get rid of all my bills in this time frame, they could do a 10 pay, 20 pay, whatever they want to do, and they can be done with it. Life insurance paid for. Right. There's even for people who want to, there's single pays, right? Obviously that's a lot of money, right? If I'm buying $1 million death benefit, they may charge you like $500K for it, but it's instant, but you get to take your money out if you need to. Right. So, for whatever your needs are, there are some customized solutions as well. I don't want to get too deep into those, but the bottom line is whole life is permanent coverage. And so this is the thing. People always try to put the whole life and term against each other. It may be a situation where you need both. You don't have to have one or the other. Right? A lot of times with our finances, the different things that they have, tools that they have for finances, a lot of times you need multiple things to make you be able to reach your goals. A lot of times it's not one product out here that it's like, okay, I got a pension, I'm good. No, I still need something else, right? So, or I got a 401k, I'm good. It's not like that, right? It depends on your needs, your time frames. And one of the things I want you guys to know, you can build a tax-free retirement income out of your policy, still leave your family money, right? So it's like you can also, some people use it to scale their business, whatever it is you want to use it for. You renovate your house, get a house, whatever you want to do. Now, let me be clear. You're not going to get a $25,000 policy and be able to do all of these major things, right? But if you are able to get the larger policies, you will have larger cash value.
Right.
But if you get nothing's wrong with the smaller policy. If this is where your finances are, then this money will be related to what you're making.
Right.
And it will make sense for you.
Right. Right. Makes sense. What was my other question was the benefits of whole life when we talk about the dividends, right? Is that offered at most companies? Because there's plenty of insurance companies, right? So is it more beneficial for when you do whole lives to go through some of the major insurance companies versus the smaller ones because of the dividends? If you're looking for, a benefit in your cash value.
So it's not necessarily the major companies as it is smaller companies. What it is that you want to go with a mutual company.
Got it.
A mutual, and there's so many of them, right? But a mutual company is a company that pays dividends to their whole life, to their permanent policy holders. And so those companies, naturally, your cash value is going to be larger, right, than some of the other companies. Now, there are different mutual companies, and obviously some companies are doing better financially than others. So the ones that are doing better, their dividends may be higher. So it does matter about the companies you go with. Also, you want to be very mindful when you get life insurance. You're not looking for just the cheapest option. You're looking for the company that makes the most sense for the money. Because if you get with a company that's getting brought out every 2 years, by the time it's time for your family to get paid out, we won't know what company your insurance is with. Right? So you do, it is. And then, of course, the bigger companies probably have better customer service, just they may have more options. So it does depend about what it is that you're trying to do, alongside what type of policy you want. Not every company offers whole life.
Right.
Okay.
Oh, okay. That's interesting.
Not every company offers whole life. Just like there's companies who only do term, only do universal life. Only do whole life, right? Only do guarantee issue whole life, which is a different type of whole life. Okay, that's for people who are sickly and don't want to go, they don't have to go through a medical or anything. But it's stipulations. And I want to make this, I do want to touch on this. If you have a family member that has a guaranteed issue whole life, that's those ones you see on the TV where they tell you you're 50 years old, all you got to do is sign and you get this policy, no medical, no nothing. Be clear, that is not a dividend paying policy. That is not a participating policy, meaning it doesn't grow cash value. It's just a death benefit. And you must live 24 to 36 months before they pay out the actual death benefit. Otherwise, they give you back your premiums plus whatever interest that company is offering, which is anywhere between 2% and 10%. All right, so be very mindful. When people are quick to say, oh, you don't need no medical, you don't need nothing, just sign. Hold on. Let me just see 1 second. If that's the type of whole life I'm trying to get.
Right.
Now it doesn't mean that there aren't companies that allow you to get the policies with no medical. They're probably getting your records and everything else. There has to be underwriting. If there's no underwriting, that's a guarantee issue policy. That means they're just literally like, you sign, you pay, you got it.
Got it. Understood. Now, please, if y'all have questions, because again, this didn't take me one go to understand all of what Lindsay's talking about. So please drop the questions in the chat if there's any questions based off of what she's, talking about.
And let's touch on one more thing, Shari, because this is something that I think is really, this is in general for everything. Beneficiaries, right? It is very important that you guys have beneficiaries on everything. Your bank account, your 401k, your life insurance, because and keep it updated, because too many times I've seen the money go to somebody's ex-husband or ex-wife when they have a whole new family with kids. And let me tell you something about named beneficiary. There is no way you can change it. That you can't go to the court and say, well, I'm the one, the wife. No, name beneficiary is what it is. So some of the things that are named beneficiary are going to be life insurance, annuities, like your 401k, investment accounts. Those are things, they can't be changed. You can't come and fight and say, but I'm the wife, or I'm the one with the children. Make sure that you have your beneficiaries up to date. And please understand that minors do not get paid. So please understand, and Lily is on here.
Yes, I'm gonna bring Lily up. Yep.
Yes, Lily is on here. So that's an estate attorney. She's very good. She's done mine. She's done Shari's. But what I want to mention about with Lily is, listen, if you guys want to control the money in your life insurance plan when you leave it behind, you must get a trust. So if you have assets, you need to talk to an estate attorney. Lily is on here. You guys can reach out to her. Lily, put your info in the comment. But you have to talk to an estate attorney if you guys are looking to control the assets in your life insurance. Yeah. You will not, what happens with the life insurance company is whoever you put as the beneficiary, that's who they give the money to. They don't have anything to do with managing how they spend it. So if you're somebody who's saying, I have a house and I want to leave it behind and I want it paid for, and my insurance money is to pay for that and then take care of my kids or this or that, you have to set up a trust so that you're able to, to put those things in place. Okay. But definitely Lily is a really good estate attorney. If anybody has questions about wills, trust, she can definitely help you with your estate planning.
Yeah.
We
have some questions, Lindsay. Okay. There's a question that says, can we increase the policy later? If I take out a $25,000 policy, can I increase the same policy to $75,000 in 2 to 3 years, or do I need a new policy altogether?
Okay, so you would need to get a new policy altogether, because in 3 years later, when you're getting the policy, you're 3 years older. So that first policy for $25K is going to be based off of your current age at today. And in 3 years, when you get the new policy, you can still get just $50,000. Your total coverage now would be $75K, but it will be 2 different policy numbers. There is an option when you purchase the policy to get a rider added on that allows you to increase your coverage over time. It's usually going to be certain times that they allow you to do it, and it stops at a certain age. And all it is that the insurance company will underwrite you for that additional coverage in the beginning. So that's why they're going to allow you actually to increase that policy. But your bill will increase too when you do that.
Perfect. Another question. Well, this one was actually for Lily. She was saying that she didn't know that the guarantee issue policies had all of those rules with the beneficiary rules.
Yeah.
And she said, must spouses be the beneficiary of life insurance policies?
She said what?
Must spouses be the beneficiary of life insurance policies? Like, is it required that the spouse?
No. So you can choose whoever you want. You have to just name them on there, whoever it is. I will say on guarantee issue policies, some companies have it where it has to be like your spouse, your kids, but you can call into the insurance company and change the beneficiaries. Right. So sometimes on some of the guarantee issue applications, they do have it where they put your spouse, but you can just opt to not have the spouse. There's usually like a box to check to say, I'm not choosing my spouse, I'm choosing other. So you can pick whoever you want as your beneficiary. You just can't pick whoever you want as your owner.
As your owner? What is
as
that?
The owner of the policy.
Oh, okay.
So, like, let's say you want to get your mother policy. Mm-hmm. Because it's your mother, you can get it.
Right.
But if a cousin wants to get the policy for your mother, they're like, why? Mm-hmm. Show me paperwork that says you're taking care of her, she lives in your house, because they want to know, like, why do you want to get the insurance on this person? So you do have to prove why you would need ownership. And they a lot of times will fight you on people, that are not like immediate family, like spouse or child,
right?
Trying to be an owner.
Got it. So let's expand on that. I think that's a good point to talk more about, because that was another thing that was new to me, right? I always understood like my parents, they have their own life insurance. So, whatever, God forbid something happens, their policies will take care of everything. But then you open my eyes to, you can actually open up a policy on your parents to add to the policy that they already have.
Absolutely. So to be honest with you, in other communities, they actually use that as a way to create more wealth for the family. Because what they'll do is they're going to get a policy on the oldest because they assume that's the next person to pass away. So, for instance, in your situation, you have siblings. You guys can collectively get a policy on your mom with the purpose that when she does pass, that money is going to probably go to like Jason, right? To like your nieces and nephews, your kids, right? So the purpose is that you're going to pay. You guys will split as much as a policy that you can get. You guys will get that tax-free benefit. What will probably happen is around the time that they're in college would be around the time of the demise. So now there's no debt for school, right? You would pay for you guys' kids to go to school for free. So in the Jewish community, what they do is they skip the generation. So everybody is getting a policy to skip that themselves and go to the generation below because they've already received.
Right.
So now with doing that, everybody things should be a little bit easier for everybody. Right. So the further we go in, the more we should be worth.
Yes.
If everybody keeps doing it.
That's
right. But of course, to really, and this is the thing, and this is what we have to start doing. You know how these families like Rockefeller and all them, they have rules. Their families have rules. There's rules about what you can and cannot do financially. And if you don't follow the rules, you get kicked out the trust.
Right.
So the issue with us is we have no planning, no rules and nothing. It's we just live in.
Right.
If we were to sit here and set trusts that say, this is the rules.
That's right.
Well, I'm going to buy life insurance. I'm going to put it into here. This is going to pay for XYZ. But guess what? When you're old enough, you have, of course, you buy your kids' policies, but then they'll have to get their kids' policies. And the money keeps funding the trust, which can fund assets, whether it's real estate, whether it's, art. Some people are going to fund all different type of things, investments. This will keep the money growing.
Right.
But if we follow the rules, every generation will be worth more. Yes. Because we will keep getting larger and larger life insurance policies.
Yes.
And more assets will be added to the trust.
Yes.
So we will all be born into having money. But we don't follow rules and we're not consistent.
But we don't know, in fairness.
And we don't know.
We don't know. A lot of people don't know the rules and it's not talked about enough. Again, I didn't find out about this to this level of detail until I reached my 30s, right? So I do think, and that's part of the reason why we're even on this live today is like, and the reason why this is called Each One Teach One is because we have to pass the information on. We have to. It is our duty. We have to strengthen our communities. We have a few more questions. Let me first ask the question that's in the question box. It says, what are your thoughts on getting life insurance on children?
I absolutely think as soon as your child has a social security number that you should have a policy for them. One thing about that is you cannot buy insurance on your child if you don't have insurance, because that doesn't make sense to the insurance company, right? So typically if it's a baby under 4, you have to have 4 times the amount of insurance that they have. Okay, so for example, if you're buying your kid $100K, you need $400K. All right, they do ask that question. So it's important that you're covered first, and then you get your child covered. But you should absolutely have a permanent policy on your child for 2 reasons. 1, because life is unknown. But 2, because it's building an asset for your child. Its whole life. It's going to build cash value. And if you get it when that baby is born, by the time they're 21, that policy is probably going to be paid for. especially if you do a custom, like I told you, like a 20 pay or 15 pay, it'll be done. They'll have it for the rest of their life.
Right.
So
Right.
you're setting your child up from the start. Okay. So I definitely think everybody should get their kids. The policies for kids are very affordable. You're talking, it could be all the way starting at $12, $13 a month if you get a 25K policy. But if you can afford to get them a larger policy that's obviously going to build them more cash value, go ahead and spend the $50 and get a 100K.
Right.
Which is going to end up growing if they live a long life to 400, 500, 600K to go to your grandkids. That's who that's going to go to. Right. So let's just start thinking that.
Right. But it is important to make sure that wherever you start, you feel like you can continue that for a long, because if it lapses, there's nothing.
Then it's right.
Right.
Get what you can afford. Absolutely.
Right. Lily had a question. She said, how much insurance can someone buy? Is it a total or per insurance company?
So it has to do with what you're worth, right? Obviously, when we get into the higher amounts, they're going to check financials. Pretty much once we pass 5 million, they're usually requesting that we prove how much you make. I had a colleague who did 100 million for a particular
policy.
Yeah, it was for a celebrity. They did break it up into 2 insurance companies. One insurance company did 50, the other insurance company did 50. I think it's more because it was like a artist. And I think that, sometimes the insurance company don't want to take certain risks.
Right.
So I think it's going to depend on who you are. Right. I know in New York Life insures Oprah, and I know she has over 100 million as well. So, you can get those amounts. It's gonna, they're gonna dig into your financials at that point, and they do a lot more underwriting. For those people, once your net worth is over 20 million, they do a lot more underwriting. But you can get it. If you can afford it, if that's what. But what they're not gonna let you do is buy 10 million in coverage when you're worth 100,000.
Got it.
Even if you can afford it, right? Because you may be able to buy a $10 million term. If you're young, it's really not, it's not a crazy price, right? But they won't let you get it if it doesn't match with your net worth and your assets and stuff.
Got it. Okay. There's another question. I'm looking to get my 59-year-old mother a guaranteed life insurance policy. She currently has workplace life insurance, and she's asking, does that make sense in some cases? I think she's saying that the current policy is $20,000. It's a small policy.
Okay. So the reason why you want to get guaranteed issue is because your mother has health concerns, or is it you think that that's what you have to get for the age? Because you only want to get a guaranteed issue policy if it's health issues that you feel that they cannot get issued through a regular company. If you can get issued going through underwriting, that is what you want to do. Because again, like I said, the guarantee issue policy is a policy that's really a flat death benefit. It doesn't grow, and it has stipulations, right? So if you're able to get the insurance through going through regular underwriting, then, that's always going to be better. And a lot of times that will come out cheaper if you go the regular route rather than going guarantee issue. But it does make sense. I mean, today, unfortunately, with the pandemic, I was hearing crazy numbers about how much people were spending for funerals and burial. They're taking advantage, obviously, right now. So, 20,000, especially later on, it may not be enough. I just had a client that spent 23,000 and they didn't even have a funeral. They did like a burial, and they still got the body taken care of from the funeral home, but they didn't have the actual reception and all of that. And I was like, how much? Because it was so much cheaper before, but they were saying, to get a slot, they're charging premium. So I would say if you're not doing cremation, then I would definitely have a policy if you can afford to more than 20,000. I would go for just safe. I would go for having something up to 50K, just because there's other expenses that you have to take care of when people pass away. And you just want to make sure it covers everything.
Right. Got it. Okay. And then the next question was, if you buy a child a policy, can they buy another policy when they get older?
Absolutely. So you can have as many policies as you can afford.
Mm-hmm.
There's no limit on policies. I have 12, right?
Mm-hmm.
And it's just because at different times I felt I can afford more. I got another one. You know, you keep layering and you keep getting more over time. So
Mm-hmm.
you can have as many policies as you can afford to pay the premiums.
Mm-hmm.
Now, the only reason you wouldn't be able to get a policy later on would be a health reason, you know, if you don't qualify anymore.
Mm-hmm. Got it. Um, and I know you touched on this earlier, but I know some people joined after we started talking. If I have insurance through my job, do I need anything else?
9 times out of 10, you do, right? So if your job insurance is group insurance, meaning this comes with your employee benefits, then that means it only is there when you are an employee, not a retiree or not a laid off person or a person who left. So what you want to do is you want to always kind of have your own insurance outside. This way, if you decide you want to change your jobs, your insurance is not tied to it. Same thing with people who get like that bundle package through their car insurance, like State Farm, where they're like, we give you life insurance, car insurance, home insurance all in one. And
Mm-hmm.
then when you cancel your car insurance, all of a sudden the price skyrockets.
Right.
Right? A lot of times I tell people, just get your insurance by itself,
Mm-hmm.
and it's not connected to if you have something else.
That's right.
Um, this way you don't run into those problems of it either spiking in price and now you're older and you go somewhere else to get insurance and it costs you more money, right? Or
Mm-hmm.
the fact that, you know, you lose it altogether because you leave the job.
Right. Right. Okay. And then it was another thing that I know we talked about, which is, I think it's important for everyone to understand the difference between a life insurance policy and accidental death,
Oh,
because
yeah.
some people believe that that's a life insurance policy, right?
Definitely. So what I want everybody to do is make sure that you look at your policy and you know exactly what type of insurance you have. There are a lot of different types of life insurance policies, and then there's also a lot of types that people are just calling insurance, and people get confused and think it's life insurance, right? Like
Mm-hmm.
there's cancer insurance, you know, there's accidental death insurance. You know, some people have insurance, long-term care insurance, and these are not life insurance policies. These are policies that if a particular thing is happening, you're covered. If you get
Right.
cancer, you're covered. You know,
Right.
if you have a long-term care event, you're covered. If you
Right.
die from an accident, we pay,
Mm-hmm.
right? So what happens if you die because you were sick?
Mm-hmm.
We don't pay.
Mm-hmm.
So only life insurance will cover you just dying, period.
Mm-hmm.
However it happens, right?
Right.
Except for, of course, if somebody decides to commit suicide in the contestability period of the insurance, they don't have to pay for that.
Right.
But they will give you your premiums back plus interest. But they
Got it.
won't pay you the death benefit for those type of things. But you know, so just make sure, look at your policy, see what you have. It's typically in the first 2 pages. It's going to tell you the type of insurance it is, the face amount, your beneficiaries, so you'll know if it's term, if it's universal life, if it's whole life. Now, because different companies call the policy something different, you got to pay attention to the word play that they use,
Mm-hmm.
because some companies might call a whole life 100, or, you know, universal life age 121. You
Right.
know, it's so many different names. But
Mm-hmm.
what you're looking for is it term, whole
Mm-hmm.
life, or universal? Somewhere in that name, it's
Mm.
going to say one of those 3 things.
Got it. Got it. This is so helpful. I hope that everyone within this chat has gained some knowledge or some clarity or additional context that is needed surrounding life insurance. And everyone that doesn't have life insurance or needs to increase their life insurance, please reach out to Lindsay. She has her own firm and she's available. You just have to schedule some time on her calendar. And I think I feel like we covered so much. And as I mentioned before, I didn't want to give them too much information,
Right.
just in case this was, anyone's first time really understanding this, because it's a lot to digest. And I feel like you have to hear it more than once. But you definitely gave us some great digestible information that I think everyone can take. And
thank you for having me, guys. Thank you for having me. And also, if you guys want a little bit more, just detail on the different types, I just recently started a YouTube, and I put a video up of breaking down all the types of whole life, all the types of term. And I'm supposed to put a video up of all the types of UL and the writers. So it will be a place where I actually dig deep into it, because it is a lot of information to really give you at one, in one shot deal. But I really appreciate you having me on here, Shari. I definitely think this is a topic that, I know it's life insurance is a boring topic, but it's something that is an integral part of our financial portfolio, right? Just like we have investments, we need to save, we need to budget, we need to focus on retirement. We need to make sure that we have insurance. We need to make sure we have estate planning. I know people think that planning is going to happen on its own, but please make sure you're not left out here, at least with a will, right? If you don't need a everybody doesn't have to have a trust. Of course, that just depends on your assets. But definitely, please have a will. Don't be out here how Prince had somebody taking over his $600 million estate. The state tells you what to do with your money. So please, everybody get your will together. Don't forget about what we talked about, beneficiaries. Please check all your different things, your work stuff, your bank account stuff, everything. You have investment accounts. Make sure the beneficiary is the person you want.
Yep.
So if you had more kids, you added them on.
Yep.
So just those simple situations could really help, change something after we pass away.
Yes. Yes. And I think that it's important for us to do this again, because there's going to be more people that join our community, and the information never gets old.
Right.
It's always good. As much as I have easy access to you, I always need, refreshers. So we will definitely do this more than once. And
absolutely, anytime.
Yes, and thank you everyone for all the questions. And definitely hit Lindsay up, because I see some questions coming in. So just DM Lindsay additional information. But thank you, everybody.
Yeah, thank you. I know Shari is tired.
Yes. And next time I'm gonna get a tripod so that I could really do this live thing
I'm gonna brought you one. I just brought another one. I got 3 of them here.
Oh,
I just bust out another package just now. I opened one. I'm over here. I collect too much stuff.
Yes, I have to get one.
Yeah.
All right.
All right,
have
guys.
A good night.
Have a good night.
See
Bye,
you later.
everybody.
Bye-bye.
Bye.
Now, how I end this live?
Just press leave.
Okay. Are you sure you want to end live?